Hi guys, Rupin here, and in this video I will give my personal opinion on some of the stocks that were listed in this month's market summary report and stocks that were bought or recommended by experts this month. Note that I am not a SEBI authorized expert, I am just a blogger with personal opinion and my opinion doesn't count. Please seek SEBI authorized expert for advice. Next, remember no matter what is stock analysis report and who gave it and how detailed it is, an analysis is always a probability and there is only one thing that comes with every probability is that it can be wrong. So always manage risk when you buy your stocks. Remember, your goal in stock market is not to be right all the time but to make a lot of profits when right and avoid losses when wrong. As always, market summary report had a lot of stocks. From them only two caught my eye. First is Aztec Life Sciences. Now Aztec Life Sciences is medical sector stock. Fundamentally it is strong and growing at a very steady rate, so that's not really a big problem because everyone knows that Aztec Life Sciences is right now making big names for itself. It grew a lot since year 2013 and there is still upside left. As you can see, it recently broke the resistance and entered into second price cycle. Here also on KST we can see the beginning of new price cycle, and on RSI here we have strength based entry signal. Again, the resistance break has come with huge amount of volume, which guarantees that there might be a good upside left here. So overall, if we see at Aztec Life Sciences, then it is a technically and fundamentally extremely strong stock. And expecting 200 and 300 rupees upside from here is not really too much to ask for. In fact, 200 rupees should be considered at least as conservative target. Here you have at least 100 rupees risk on per stock since it is trading for 400 rupees already. And you have to keep your stop loss at 240 in case you are planning to buy this. So far as my personal opinion goes, I think this stock have really very high potential and can become a multi-bagger in long run because it has really performed very well, have very good order book, and recently I think they are also planning to export lot of medicine. They also have manufacturing units for equipments. So overall, if we look at Aztec, it does look like a stock that have very high potential in future. The next stock that caught my eye was SpiceMobi. Now this is not kind of stock which I would recommend for a long time. It is only technically strong for short term. Here as you can see, it broke double bottom. If not visible, look on line chart 1 and this is 2. Break has come with good volume. Here also we can see the divergence. A double bottom with divergence is always a good sign. Therefore, I can say it can move at least to 20 rupees from here. And you can maintain your SL at 13 rupees if you are planning to buy this one. Note that after buying SpiceMobi, you have to be totally dependent on your technical skills because 20 is very conservative target and it can actually move about 20. And holding time may differ from 1 to 3 months. So if you are planning to buy this stock, then you need good technical skills to make sure that you exit in profit because the stock is already in downtrend and this looks like a very short term move. Now before we take a look on expert stock, a little shameless self promotion. If you are interested in learning how to trade stocks, futures and options and need someone to teach and assist you, then you can count on me. I charge only 25,000 against which you will not only get to learn from me, but I will also assist you with all your trades that you will take for 1 month. Requirement is that you must be able to buy and hold at least 2 lots of Nifty. Note that I am not charging you for teaching but to assist you. In case you don't need assistance, I also have video course on Udemy, costs only $30, but for 30th of July there is 50% discount for first 30 students. 50% discount is introduction offer and after July you will never find it for that price. If interested in personal learning from me, use contact form to send me request. Note that I take only one student every month. Once that position gets lost, you have to wait for next month. My course will remain on Udemy forever and Udemy will have control over promotional price. Links are in description. Now we will take a look on some expert recommended or expert bought stocks. The first on list is Apcotex Industries. Now Vijay Kedia actually bought this stock very long time ago, so he is sitting with lot of profit. Now Daljit Kohli also recommended the same stock. He tells that the stock have at least 61% upside. Well, on fundamental front, I cannot argue with Daljit Kohli's opinion on Apcotex Industries, but on technical front, the chart doesn't really have the required strength to show that much upside. And even if bought at these levels, it really seems to be very risky. Still, if you trust Daljit Kohli's opinion as I do, then you can buy it even at these levels. But be sure to manage risk properly because these stocks really comes with a very high risk. Apcotex Industries is fundamentally strong, but that fundamental strength right now is not visible anywhere on stock. The next stock is Wonderla Holidays. Narayan Murthy, the founder of Infosys, is also known very well for his stock picking skills, and this month he bought Wonderla Holidays. On fundamental front, Wonderla Holidays doesn't have a lot of information, only 2 years of information, and from that we have to make our decision. By the way, Wonderla have like 2 parks, amusement park in south, and they are right now planning to grow a lot. So I don't think Narayan Murthy is wrong to pick this stock. Risk wise, the risk is extremely less. So if you are planning to buy this stock, then you are advised to also keep eye on Narayan Murthy's position in this stock, because if he would be exiting this stock, then for sure something is wrong. The next stock was recommended by DD Sharma, and the name of stock is RPP Infra, right now trading for 166 rupees approximately. On balance sheet, as you can see, net worth is regularly growing. There are some secured loans and practically no unsecured debts. On profit statement, they have consistently generated good sales. EPS is not bad either. It also grew with growing net sales. Now RPP Infra Projects is South India based company, and hence not many people know it in other areas other than south. It usually takes road and civil projects. As per DD Sharma, RPP Infra Projects never takes a project unless it have a good margin. They have very less debt, good balance sheet as we saw, and it is right now very small, means total net worth is not really more than 135 crores. But this company has been pulling tie-ups from China and Canadian companies, and right now have more than 800 crore order book, and with net worth that is as small as 135 crores, you can really expect it to make big name if it completes all its projects successfully. 800 crore order book is actually very much for a company whose net worth isn't even 1/10 of it. As per DD Sharma, 800 crore order book was for the time when he recommended the stocks. He is very much sure that the order book is supposed to improve. He gave target of 240 for 1 year, and here is chart of RPP Infra, and looking at it, you can say that the stock is no doubt strong on technical front too. So I think DD Sharma isn't wrong, and this stock can surely hit the target of 240 in 1 year, maybe little more time, as a conservative target. As aggressive target, it can go extremely high, because 800 crore order book for a 135 crore company is just extremely big, and the tie-ups that are coming from China and Canada can really help this company to just hit another level. For a small scale company, having this kind of stuff is like too much ambitious. So I support DD Sharma's opinion, and I think RPP Infra will surely hit 240 target. Next stock is Arvind Limited. recommended by Avinash Gorashkar. As per him, the company is on path of more expansion. It is focusing more on branding and retailing. It sends its products to top brands of different countries. Right now they are growing for compound average growth rate of 45% every year. EPS is expected to grow to 17 to 18 rupees this year, and since they have very aggressive expansion plans, they will be taking a lot of debt this year. As per him, this stock might hit the target of 370 by end of this year. Now right now it is trading for 328. This is balance sheet. Here we can see it already have a lot of debts, and as per Avinash, they are taking more debts to expand. So more loans usually add to the risk, but looking at the fact how Arvind Limited managed itself up till now, it doesn't seem like they cannot manage risk of debt. On balance sheet too, you can see there is constant growth in net sales and EPS, and this EPS is supposed to grow to 17 to 18. Well, I am not really very big fan of predictive analysis. 17 to 18 is like too much to expect. So looking at everything, the stock really looks technically and fundamentally strong, but it do have little risk attached to it. If you want to buy it right now, then I would advise to buy it with stop loss of 235. Next stock is SBI. Ashish Kukreja recommended this stock. As per him, it can hit 250 in upcoming 3 to 4 months. As per him, banking reforms will help SBI to grow. The small banks will be merging with SBI, which will also help. SBI is expected to show some good earnings, and as per him, whole banking sector is consolidating, and so is SBI. He recommended that you could buy the stock at current levels too, and if it falls below 200, you should average it here and expect 240 to 250 in 3 to 4 months. Looking at technical levels, it really looks like Ashish Kukreja has given really good advice, but still you are advised to manage your risk properly. The next stock is recommended by VK Sharma. It is Hexaware. He gave like 260 rupees target for 1 year. It said that Brexit will hardly anyhow hurt Hexaware. Only 12% of its income comes from European countries. Rest all comes from other countries, from which 21% comes from USA. On fundamental front, I cannot argue with VK Sharma, but the fundamental strength is right now not visible on technical front. Therefore, I am not very confident about this purchase. So I am not really very confident about Hexaware. If I would be at your place, most likely I would have skipped this stock and wouldn't have bought it. The next stock on list is All Cargo Logistics, recommended by Sudeep Bandyopadhyay. Now as per him, the stock is fundamentally strong, no doubt about that. Next, it is high margin stock, no doubt about that too. Third, it have good domestic and international market cover, no doubt about that too. Strong balance sheet, very much true. It will get benefit from GST. I don't know how. By the way, he is expecting some serious growth in business. Well, not gonna lie, but I don't see that kind of strength right now on All Cargo, because it had discounted like several years of earnings. No doubt it is a high margin stock, but it looks like everyone is recommending All Cargo Logistics right now. Even Ventura recommended me, but I didn't buy because this happened. A big red candle. A big red candle with support break usually represent a huge shift in price volatility, and that means there is a weakness in upside. So technically, All Cargo Logistics right now is not supporting the fundamental strength described by Sudeep Bandyopadhyay. I don't know whether it will fall or not, because fundamentally everything looks right, but technically doesn't. The fact is, whenever fundamentals go strong, technicals follow them and they become strong too. If this stock is becoming fundamentally more strong, then that strength should appear on its chart. Right now, that strength is not here. As I told you, I didn't buy when Ventura recommended it. I especially said that Ventura recommended it and I didn't buy because I have high faith on their analyst. Whenever they come up with stock, majority of the times they perform and they perform like crazy. The next stock is recommended by Gaurang Shah. Name of stock is PTC India. He said buy and wait for like 1 to 2 years and gave conservative target of 115 and aggressive target can be more. As per him, the stock is right now consolidating, and in spite of bad times that this stock saw in last few years, he is very sure that this stock will perform because government is planning to help the industry. Well, honestly, there is very minor technical strength when it comes to PTC India, and I don't doubt Gaurang's opinion, but taking position just on the fact that government will be helping this industry is not really good idea. Another stock is Redington India, is also recommended by Gaurang Shah. He gave conservative target of 145 for 2 years. He said that Make in India will help this company to make progress. By the way, he also admitted that stock has not performed either on fundamental or technical levels from last several years, but he is hopeful just on the basis of Make in India. Now I don't doubt Gaurang Shah because he had given some really good stocks in past, and majority of the times whenever he recommends a turnaround stock, it does turn around. But whenever he proposed turnaround before this, there was some kind of technical strength, but on Redington India there is almost nothing as to say that there is some technical strength. So I don't think Redington India will hit his recommended target. Now before you leave, just want to inform Amazon is offering up to 40% off on smartphones like iPhone, Lumia and HTC, along with 50% discount on power banks. This week you can also find up to 30% discount on Lenovo, Asus, Apple and Toshiba laptops. Links to offer are in description of video if you want to take advantage of them. With that said, thanks for watching this video and have a nice day.